Hey everybody, want to go over the ICT Silver Bullet Hour from 10 a.m. to 11 a.m., the AM session. This darker gray area is the 10 a.m. to 11 a.m. Eastern Time. I'm going to give you a chance to look at that first before I start adding things to it. First thing I want to go over is my rules of engagement. So I trade the 2022 mentorship model. I'm looking for a higher time frame liquidity to be taken. Then I'm looking for a swing high or swing low broken, so that'd be the market structure shift. I need displacement that formed a fair value gap or a PD array entry like a breaker block, a mitigation block, or an order block. Entry parameters, I want to risk 1 for 2 and a minimum of at least 5 handles. ICT says you should target 10. If it doesn't do 10, it's not a high probability setup. Stop placement can be below the first candle, the fair value gap, or below the breaker block, mitigation block, or order block. And then I can move stop to break even and take partials once price reaches 60% of target. Okay, those are the rules that I go by. So when you start in here, first thing that you see is this relatively equal lows that it comes out and takes out. And I'm going to squeeze this over so you can see where those are. Those are right here at the midnight open. Right there, those are your relatively equal lows that it took out. Let me just show you those, so you just don't show that I just throw random lines on the chart. There it is. It takes out that liquidity. Now we're looking for a break of structure, right? So where do we get that? Right here is a break of structure. Let me show this on the line chart so you can see it. It's where it breaks. Kind of hard to see there, but it does break with the wick. I have seen ICT take it with a wick breaking structure. And then where is the fair value gap? It's right here, right there. Price comes down into that fair value gap, and there's your trade. Top there goes to the bottom of the third candle, which is here. You might as well go below the low, and it's 5 handles, and you shoot for 10. Where would you be targeting? Probably this high right here. So there's your buy side liquidity, your draw on liquidity right there. If you actually hit it, you'd get 12, but you don't. Okay, so I want to show you why price went beyond the fair value gap. Well, what do you call this? That right there is an order block. So there's your order block entry, and it came down right here. So you could have actually lowered your risk to the order block. Now you may not have gotten filled here. Just so happens you got filled here. And you could have aimed for this one, so you could have had, 13. You wouldn't have hit it, but there's 13 handles right there if you would have got the order block entry. Okay. Either way, that was 10 handles when it was up here. 10 handles was here. So there's 10 handle move. Okay, so price comes up here. What does it trade up into? So it comes to the order block, goes right there, and then comes back down. When it comes back down, you have a fair value gap in here, but it comes down and takes out a swing low. So a market structure shift to the downside. Comes down here, also takes out this low here as well. So liquidity is now taken. Where's your fair value gap? It's right here. Now when it comes up here, there's no swing low to take this out to consider, hey, liquidity's been taken, maybe it's a change of market structure here. There's no swing low that it took out here. So it's merely coming back into this fair value gap. You could take that trade right at the fair value gap here, 5, target 10, which would be below this, and then you actually get it right to the tick. And if you didn't get filled there because of the spread or whatever, you got filled over here. So it worked out either way. Where was your draw? Obviously your draw was right here, so that gives you your 10. You're aiming for 10. You actually have more, but that's where it was. That's what you're aiming for. There's another 10 handles. So there's 2 10 handle moves in the AM session, the ICT Silver Bullet Hour.